Welcome to Second Take, the show that focuses on the issues behind the news. The launch in Singapore of the exchange-traded gold Kilobar contract is expected to spark new demand for gold. Mining Weekly editor Martin Creamer tells us more. Welcome, Martin.
Thanks, Shannon.
Firstly, can you tell us about this exchange-traded gold Kilobar contract, as well as the key driver for its implementation?
Yeah, firstly, the most important word there is gold, because gold needs a boost. And secondly, the contract idea, it is definitely metal. It's not paper. So I'm very pleased to report that this is happening in Singapore. It's a physical market. Once you do the deal, you get the physical gold. We've seen too much activity on these futures markets where you just see a pile of paper going up. And then it's exchange traded. So that's traded on an exchange, which is so important because the exchange is regulated and therefore it is fully transparent. You can see what's going on, and we know that is essential at the moment for some of these precious metal prices. People are looking at the way the prices arrived at, and some of them are shaking their head because they can't understand how it can be done in a sort of a opaque manner, with four bankers coming together and arriving at a price, and we have seen some investigations into that. So I think Singapore picked up that vibe. The other part of it is that Asia is the big driver. Asia is not only the biggest producer of gold now, but it's the biggest consumer of gold by a long shot. And that area of the world, Singapore, Southeast Asia, the growth of gold consumption in that area and gold investment in the last 10 years has grown 250%, whereas the average in other markets over the 10 years has been 50%. So massive growth there, and they're looking to controlling their own destiny, setting it up in their own exchange, because a lot of the pricing took place at a time when they were asleep. So they weren't even awake for the actual determination of the other prices. So they're going in there. I think it's going to be good for gold, because the other big thing is the Kilobar. That the Kilobar is important because the good London delivery bar, the big chunky bar, they weren't using. So what was happening is that you buy the London, you buy in that unit, but then you give it to a Swiss refiner who takes it down to the Kilobar, and then you wait for the Swiss refiner to give them back to you as different size bar. Now that'll be done immediately, because they're taking that into their own hands as well, the Singaporeans. The government of Singapore, very keen to get this going, wants to be a gold trading hub and precious metal trading hub, cut its GST, the taxes that are charged on the services, etc. Did away with that, and it immediately sparked a lot of interest, not only by people working in the precious metal side, but also refiners. So as we sit here now, a big refinery is opened there, officially opened as we sit here now, and that's because of the atmosphere that's being created. They want this to be a trading hub, and they want to have their own supply chain. And I think it's going to be quite interesting for gold, because it should create more demand.
How is this exchange-traded contract different to the London fix?
See, the London fix that has come under the spotlight, involves a handful of bankers sort of phoning each other and arriving at a quoted price. It's opaque, and not only that, but we see that there has been a manipulation, and the manipulant has been fined. So Barclays Bank PLC have been fined, for irregularly pushing the price down, so that they wouldn't have to be faced with an amount that would have to be paid out if the price were up. So that immediately, I'm sure, has angered the East, because the East is the big consumer of gold. Why should they have to rely on a price, in London, which is fixed in a different time zone, when they're not around to actually witness it? So they've closed their trading hours, and then the price is fixed. They've got to wait the next morning for the price. And the Kilobar story as well. Why should they have the big chunky London good delivery bar when they could get what they want? Because about 70% of jewelers and all the other people users, they want that Kilobar. And so now that's coming into line, and with the help of the Singaporean government.
Can we expect further gold products to emerge based on this contract model?
Well, that's what everybody's saying, that this is going to just be the start. In fact, they announced it, but it really goes live in September. So, and they're thinking, there could be a lot of activity in other places around there. Either they'll model it, they'll model it on what has been done with the Kilobar story in Singapore now, and have a similar type of unit elsewhere. Or, Singapore will be seen as the place, and they'll do everything through there. I'm sure the Singaporeans would like to hold on to that, but you see Shanghai also attracting people towards its market, its gold market, also trying to create innovation. I think there will be a lot more innovation, which will be good for gold. I mean, gold has been going through a torrid time. One would expect it to have done well, because the world's economies aren't doing well, and it just hasn't again. So perhaps new ways, new modern ways of dealing with gold, rather than this London fix and all the other ways of bar sizes and lack of units that people want. It'll be done away with now by the East, who are saying, look, we are the head honchos here. We like gold. We're the ones that consume it. We're the ones that produce it. We must set the parameters, and people are expecting that to happen.
What does this model mean for the future of gold in the East? Yeah,
the East, you see, gold is moving east. It's moving from the west to the east, and it hasn't reflected in the price. Although the consumption's been going up there, it still doesn't, the price doesn't show that, which must be mystifying the people of the East. But then they're starting to look at the pricing models and all that, and they're starting to say, well, we need a new price discovery out here. And that is going to be important for gold. There is a lot of gold on surface, and that is always the problem. If people want to keep the gold price down, they can sell some of the gold in the vaults, or a central bank might decide to sell gold, and they don't even announce it, but it affects the price, and jewelers then get what they want, and the other people that use gold get satisfied with it, and suddenly you wonder what's happening with this price. It's not rising, and it's a bit mysterious. But it's probably because there's so much on surface as well, and you'll never quite get rid of all that, but you could reach a point, if the price rises, the central banks will be inclined to say, hey, there's a lot of value here,
Let's
and
hold
maybe
it.
they will do it in a different way, not sell too much at the wrong time. Their timing might be better.
Now, you said that the East is the biggest consumer of gold. Is it generally for jewelry?
Jewelry is 80% of gold's use. They are looking for industrial uses. It would be fantastic if they could get more industrial uses. Platinum's got such a lot of industrial uses, and that's what buoys that price. So when the price drops with platinum, you find it goes into jewelry. It's a sort of a safety valve. When it rises, normally the jewelers back off, and that's when the industrial sector takes over. Gold hasn't got a similar flexibility, but they are looking also at more industrial uses of gold, but it's slow. And nano uses are being looked at, so there's very tiny particles of gold. It's not huge volumes. But of course, if you use it across the world, it will become big volume. So hopefully they can find some more industrial uses, and the East are not contributing in that way yet, but they are contributing with greater transparency, how you arrive at the price, done in proper stock exchange that's regulated, in this case the Singapore exchange, and moving fast. It's breathtaking how fast they move out there when they want to set things up. And now we see this, there'll probably be a lot more in other areas there. People are also talking Malaysia and possibly a few other countries that will pop up in this regard. But at the moment, Singapore seems to want to really be that hub, the government coming behind it, giving incentives. These incentives have been responded to, and the bullion banks in Singapore already being involved. And it's important that it's easier to buy gold and hold it if you know exactly what you're buying. And now that they've standardized on this unit, I think it'll help the banks a lot.
Well, thank you very much for your time, Martin.
Great pleasure, Shannon.
That's it for today. Join us again next week for more news analysis on South Africa's mining industry.